Welcome back to the channel, traders. Today, we are exploring one of the most powerful bullish reversal signals in technical analysis, the piercing pattern. If you are serious about mastering candlestick analysis, this one's a must-know. The piercing pattern is a two-candle formation that appears during a downtrend. It signals that buyers are returning and a potential reversal might be starting. The first candle is black or red, continuing the bearish trend. But on the next day, something changes. The second candle opens below the previous day's low, creating a gap down, but buyers step in strongly, pushing the price higher. By the end of the day, it closes more than halfway up into the body of the first candle. This shift from panic selling to confident buying marks the turning point of sentiment. The piercing pattern is often compared to the bullish engulfing pattern, and while both signal reversals, there's a difference. In the piercing pattern, the open is well below the previous day's range, a clear gap down. In contrast, the bullish engulfing only opens below the previous close. This gap down often happens because of panic selling. But as the day progresses, smart money starts buying, absorbing those panic sales and driving prices higher. The key confirmation comes when the candle closes above the midpoint of the previous black candle. That's your bullish confirmation. If the candle closes below the midpoint, the signal weakens. But if it closes deep inside the previous candle's body, the reversal potential becomes much stronger. Let's look at the criteria that define a valid piercing pattern. The first candle is black or bearish. The second candle is white or bullish. The second day's open is below the previous day's range. The white candle closes more than halfway up the black candle's body. Now for signal enhancements, the longer both candles are, the stronger the reversal. The bigger the gap down, the more powerful the bounce. A high volume day adds solid confirmation that smart investors are stepping in. When combined with indicators like the stochastic oscillator showing oversold conditions, the piercing pattern becomes a high probability buy setup. It may not be as strong as the bullish engulfing, but it tells the same story: sellers are done and buyers are back. A trade analysis with bullish piercing signal on the XYZ chart, a powerful sign of a market reversal after heavy selling. After a sharp downtrend, the previous day showed a gap down on strong volume, signaling panic among sellers. But the next day, something changed, the market gapped down again, yet the stochastic oscillator gave a positive crossover right in the oversold zone. That was the first hint momentum was shifting. Then buyers stepped in, pushing the price well above the midpoint of the previous red candle. This formed a strong green candle, clearly showing that bulls were back in control. This piercing pattern, confirmed by volume strength and stochastic momentum, signals that investor sentiment has flipped from bearish to bullish. Here's how to trade it step by step. Entry point. Enter the trade when the next candle opens above the high of the bullish piercing candle. Stop loss. Place your stop loss below the low of the pattern, the second candle's low. Take profit. Target 1, risk to reward ratio is 1:3. Target 2, near the next resistance zone. Like, subscribe, and stay tuned for more quick trading insights.